In this video, I'm going to be reacting to AusProperty Reddit because I think it's about time we have a look at what the community is saying around Australian property investing. Now, I'm more of a lurker on property chat and Reddit in terms of these types of forums. So we're going to unpack people's thoughts on Reddit in terms of Australian property investment. And I'm going to share with you my thoughts and real-time feedback as to what's going on here in the Australian property market. So just waiting for the September fixed rate cliff. Got to get my 300K out of the bank into some boomer bloodbath action. Millennial home buyers waiting for the next recession. There's a lot of people talking about a recession this year in 2023 and bloodbath in the property market. And we have seen a significant amount of interest rate rises from the Reserve Bank and people even calling for Philip Lowe to be sacked, who's the governor of the RBA. Look, I think we're going to end up with at least 2, if not 3 more interest rate rises throughout this year because the RBA is not so concerned about the property market. They more care about inflation. But I think there might be buying opportunities in 2023, especially in some areas where people are getting distressed. Let's take a look at some of the comments here. Boomers have paid off their places. It's the younger families that are going to have problems. Gen X here, get called a boomer all the time. Apparently anyone above their generation is a boomer. Gen X, the forgotten generation. I think that comment's probably right. A lot of the older generation paid in pounds even, £100 for their house or £100 for the land or 25,000 Aussie or 100,000 Aussie. They didn't pay the same prices that we've seen today. And I don't think wages have kept up with the current property prices that we've seen in Australia. My opinion is that money has just flooded into real estate over the last 20, 25 years. When people have had excess cash flow, they're going to want to invest that money, and that's what's inflating property prices. The real reason we're in this position is that the government really opened the floodgates during the pandemic, trying to keep the economy going, and they probably opened up far too much by giving all that cheap and easy money to the banks and then passing those on to people who are able to lend that money. Now, this can be an advantage if you can take advantage of these types of situations, get access to that easy credit. Don't over leverage yourself, get yourself into the property market and take action. But for people who have over leveraged themselves and put themselves in a tough position, or they've gone for the dream family home without being able to afford the repayments, especially with, we're seeing 3% higher than where we were at this point in time. And if we see another few rate rises, people could have gone from 1.99% up to a 5 or 6% interest rate for an owner occupied home. Those people are paying 3 times the amount of what they were originally paying at the much lower rates. So I don't think the boomers are going to struggle here. I think it's going to be more of those younger generations who've over-leveraged themselves and taken on too much debt and taken on too much bad debt, as Robert Kiyosaki would say, putting themselves in a tough position. Let's see what else we can find. Why build a window splashback that looks straight into a fence? For natural light, you can grow something that hides the fence. I agree. I don't understand why OP has taken offense to it. That's pretty funny. Now, this looks like a new build to me. Yeah, it's definitely a new build type of property. You see a lot of these glass splashbacks in those new housing estates where, they're building 1,000 homes and everyone gets a very similar property and people try to make themselves a bit unique by going for a glass splashback as an upgrade. I would generally just put a green wall there so you could plant pot plants and hang them off the wall. But also on the flip side, you don't want to be on a block where you're half a meter from your neighbor. If you're getting extra amenity because of it, because you live close to the city and you're right next to your neighbor, that's different. But if you're in suburbia, me personally, I would generally want more space between myself and the neighbor if you could have it, rather than getting squished into a 300 or 400 square meter block out in the suburbs. So here's an interesting topic, thinking of getting out of property investing. Has anyone thought of exiting property investing altogether? I'm aware that this is a property subreddit, but I want to get a range of views on this. You could work the next 20 to 30 years, increasing your income, getting more debt, acquiring 4, 5, 6 investment properties, or you could pay off your PPOR, never have to worry about a tenant, have some cash in the bank, and a fairly balanced stock portfolio that pays you dividends. A full-time job that you enjoy, where you love the work you do, have plenty of social interaction, or lack thereof if that's what you prefer, and earn fairly good money. Never have to worry about a tenant or a toilet breaking or accounting every tax period. Never have to worry about rent or paying the mortgage. Thoughts? Get out of property investing, the best thing ever. Your hypothetical isn't really a fair comparison. You're comparing a leveraged property investor against non-leveraged share market investor. If you follow the same leverage ratios and applied the capital to shares instead of property, the comparison isn't even close. Shares would outperform massively. Interesting. So this sounds like some people who are thinking about pulling themselves out of the property market, which is going to happen more often as we see this higher interest rate environment and it become tougher for people to get lending. Why not just go put your excess money in the stock market. You don't have to worry about it. And that's definitely a valid strategy for some people. The reason I still love property and I want those 4, 5, 6 investment properties, or properties worth 4 to 6 properties, that $2 to $5 million range in terms of investment assets, is because of the leverage returns. When you compare stocks and you compare property, because of the leverage gives you much greater exposure to uplifts in the market. A 10% uplift on $1 million is $100K, whereas a 10% uplift on $100,000 is only $10K. But you can get a $1 million property with only a $100,000 deposit, or you could take that $100,000 and put it in the stock market. So for me, the other main thing here is find a full-time job that you enjoy. Now, I'm an accountant. I'm a chartered accountant by trade, and I don't mind accounting, but I also don't want to have to be tied to my job. This scenario where you end up, not going the property route and you end up sticking with your job and going for dividend-paying shares and build your portfolio on the side is viable if you're in a high-paying job and you really enjoy it. But for me, one of my biggest motivations was to get out of the 9 to 5, choose the companies and people I worked with and worked for, and create my own company and grow our business and grow our property portfolio. So bringing all that together into a timeline, Emily and I are looking to create more passive income rather than less, to give us more choices right now. Now, if you love your job and you think you're going to love your job for the next 10, 15, 20 years, then that's okay. But what happens is a lot of people change. They might love their job for 3 years. I definitely enjoyed auditing, for example, for a few years. But after a while, I want to go into business. I want to have my own business and I want to move into a commercial space. And I want to understand different deals and have more equity and have more stake in the game. So whether you want to go the simple route and to go to the shares and stick with your 9 to 5 for 40 years, that's more than fine. But for me, I'd rather take the higher risk. I'd rather get into leveraged assets. I'd rather build our cash flow on the side and build a property portfolio. The other thing is, and I'm probably sure you can tell this from the videos, is I am passionate about property and investing and creating financial freedom, all of that together. So because my passions are aligned with the business that Emily and I run in Purpose Property and our investments, we've got assets spread across Brisbane, we've got assets in Coffs Harbour, and looking to buy more across Australia over the years. Especially, I'm excited to potentially start a motel chain in the next 5 to 10 years. Then because my passions are in these areas, it's a lot easier for me to want to do a lot of research, create content around this information, and obviously run a business in the buyer's agency. So take that together and weigh out whether property investing is right for you. I swear realestate.com is broken. Yeah, some of the data behind realestate.com is not always super trustworthy, especially if you're looking at 2-bedroom places because they don't have much data. The other thing is the median sale prices aren't always the best reflection of sale price. You need to look at frequency, and that's why you need to look at CMAs or comparable market analysis reports, because if your median sales price, which is the most frequent price, drops, it might not mean that your property is devalued or your investments have devalued. They could have, but you need to be aware of the data behind realestate.com.au, CoreLogic, and look at the comparables when you're looking at price data. So here's another recent post: Australia's rental crisis, an urgent need for action. Never realised what an impact household size had. One of the reasons for the rental crisis in Australia is the decrease in average household size. Prior to the COVID-19 pandemic, the average household size was 2.6 people. But during the pandemic, people wanted so much more space, and the average household size has fallen to 2.5 people. That might not sound like much, but it's created an extra demand of 200,000 homes, which is a significant number considering the average number of detached houses and units produced in a year. That's amazing that like a 0.1 drop in household size means that we might need another 200,000 homes. I've also seen recent, topics and articles on homelessness and that being a real issue. And that's something we try and support with our business. We donate 10% of our revenue to charities that support homelessness, clean drinking water initiatives. Actually, one of the projects as our YouTube channel grows is I want to build a tiny house and potentially give that away, or look to invest money into a affordable housing initiative from the money that we spin off through our Purpose Property business. But I think that people are looking for larger homes. Emily and I are doing our dream home raise and build in the next year or two, and we do want more space. We're currently in a 2-bedroom home with a bonus study space and a sleep out area, and we do think that we want more space for work from home, for this studio. We want more space for the kids to have their own rooms, which is a very Australian thing these days, that every kid has to have their own room, whereas 20, 30 years ago, it would have been readily acceptable that kids shared rooms. So in the day and age we live in, everyone's wanting more space. Everyone's happy with the more flexible lifestyle we're living by working from home a lot more. And so this is going to be an issue as we see a lack of supply on the market, and as builders in the pipeline of trades become very expensive, both on the materials and the labor front, it's going to be difficult for this pipeline to be filled anytime soon with another 200,000 homes here. And I know there's even more Australians calling out for new housing stock or more available housing stock at affordable prices. So there's lots going on in the Australian property market at this point in time. I'm going to be shooting videos on the Reddit probably every couple of months just to touch base with what's going on the forums and what people are thinking on the ground in terms of Australian property. If you're interested in hearing more of my thoughts on the Australian rental market crisis, then you should click this video over here. Thanks for sticking around. I'll see you in the next one. Peace. Great singing. You did very good singing. Oh, break, 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 ping, break, ping, ping. Good job. Yo, yo, what's good, YouTube? Welcome back to the YouTube channel. Oh, no, not for eating.